As the market opens up on 4th July 2020, the Japanese yen has lost 17% against the US dollar since 1st January 2020. Their stock index, the Nikkei 225, has lost 9.7% during the same period. But the land of the rising sun, Japan leads the table when it comes to sovereign debt to GDP. At 263%, they lead the table. And among the majors, USA is at 126%, while India's sovereign debt to GDP is 87% and China is at 78%. So maybe the fault lines have been. Against this 17% fall of Japanese yen, during the same period of 6 months in 2022, Indian rupee has shed 6% only. There are several green shoots in our economy. For the month of June, the GST collections have come at 1.45 lakh crores, the second highest in the recent months. The Food Corporation's stock of rice and wheat in March 2020, this was at 82.31 million tons. And as of May 2022, this has risen to 89.24 million tons. So the disruption has not been destructive in terms of production and storage. Our external debt to GDP is also manageable within 20%. In the US markets during the week, there was not much significant volatility, except for a 24 basis points drop in the benchmark 10-year US Treasury yield, which settled at 2.88%. Gold traded below the $1,800 per ounce mark, while Brent was higher at $111 per barrel. Dollar index has gained above 105. USD INR, Indian rupee, closed at 78.98. But RBI has added $3 billion to its reserve during the week, taking it to $593 billion. In the coming week, a marginal pullback of the Indian currency cannot be ruled out. In June, the FII pullout from the market has been 58,112 crores. But this has been significantly offset by the buying by domestic institutional investors. The options volatility was high and closed at 21.25. The Indian benchmark 10-year bond yield was almost unchanged over the week at 7.42%. But the forward indicating 3-year interest rate swap points shed by 15 basis points to 6.68%. The government has retained the small savings rate unchanged. Are these early signs of stability in our markets? Have an interesting week ahead.